Yes, so very good morning. Right, so I welcome you all to the CA final, yes, Advanced Auditing and Professional Ethics new syllabus course, yes, for the new course students, the batch, the entire syllabus we will try to cover in this particular batch, yes. A lot of rather, I think I should begin my discussion talking about MCQs, okay, and so what about MCQs? Are we going to get a separate book? Are they going to be discussed? So for MCQs, I think you should study from the module. Good idea? No, not at all? Okay. So MCQs, there is a lot of conceptual understanding, more detailed understanding which is expected for MCQs. So as we proceed with the class, we will also be discussing a few MCQs and now looking at the content of the syllabus from the viewpoint of MCQs, okay, how a question on this one could be asked in the exams. Okay, right, so yes, first part in the batch, we will be covering the entire standards, right? So how many standards in your syllabus? Okay, at CA final also, students write in the, when the audit report question comes and they write down over there, okay, we have conducted our audit in accordance with the accounting standards. Or some are upgraded. They say, no, not accounting standards, international financial reporting standards. Or some say, no, Indian company, not IFRS. Indian company is Ind AS. So cleared inter, after clearing IPCC, still they don't know that in audit also there is something called as standards. Okay. So because the accounting standards are taking so much of your time that it's far away that you know something about the standards in audit also. And then how many of you studied standards at Inter? I asked you studied. I didn't ask you if you knew whether they are in the syllabus. So whether you studied or not, at CA final I always teach standards with the assumption that at Inter you have left it in option. I know, right. And most, maximum you would have studied is SA 200. And if you study the title of SA 200, if you know the entire title of 200, overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing, you think, I know so much audit. Such a big name, I know. You give a credit to yourself only. I know audit, big name. My friends, they say only SA 200 overall objectives. I at least say the entire name, Okay, right. So that is how it doesn't work. You see, every question paper of ICAI and each question paper of ICAI is a bundle of surprise. Okay, every paper, so rather now your life has got more work, you're more occupied right now because there is old syllabus paper, there is new syllabus paper, there is RTP for old syllabus, there is new syllabus. So it gives you more, more content, more material for doing R&D, research and development. This was asked in old, so now this question can come in new. Then new this has come, so it will come in old, and all that fails. Okay, nothing of this works with ICAI. Okay, the only simple way to clear the exam is that you should cover the entire syllabus without leaving anything in option. So the only option for you right now is not to leave anything in option. You understand? So still, even after I saying this, some students, they ask, but madam, important questions. Madam, 3 chapters I want to do properly. So which other 3 chapters, which 2 chapters I can leave in option. So madam, bank, it's okay na, if I don't do. Only practice manual say if I do bank, insurance company, is it okay? Okay, rest you study November 19. Then you study May 20. You can keep on writing the exams with your children. No problem. Okay, there is no limit over here regarding how many attempts. So every attempt, see, there are 46 standards. So every attempt you study 1 standard. Okay, so it doesn't happen that way. So we have to cover the entire syllabus. Then I came to know that a few of you are skeptical over here, okay, 6 to 9 in the morning we are doing a class, or 6:30 to 9:30, whatever time. Then again evening 6 to 9 you are doing a class. So then how to do audit in the afternoon? Why did this question come in your mind? Why does this thought even, why do you underestimate yourself? You have to. I have a question. Like, you have to study, you have to study. And anyways, later on, you have to study 14 hours a day, not in a week. Okay. You have to study 14 hours a day in the library. So this is a trailer before the 6-month movie. You understand? No. So I don't think that there is any thoughts. Don't underestimate yourself. And see, anyways, I know going back to your room or hostel or house, wherever, 9, 10, you do a class, and then after that, anyways, you'll keep on pampering yourself. And you'll say, no, I'm very tired. Then evening, I cannot concentrate, so let me sleep for 2 hours. So rather than sleeping at home, sleep over here, no, in the class. At least, something will go in the brain. And I'm telling you, listening to Audit, there can't be a better anesthesia than that. Okay. So you will say all sleep medicines are not as effective, as Audit is. So you even don't think about it, of, okay, how will I do the class? My question is, okay, why is the thought coming into your mind? And then you will realize, okay, it was few days, 20 days, it was a bit painful, little bit of self-discipline was required. But at least the Mount Everest summit has been reached. So, because on your own, there is a limit to how much you can study. And doing class for Audit is very essential because, then once you have done the class, and then when you open the book, then you can more correlate, yes, I have done the marking, there is something in the book that I've studied. So it's very recommended for a theory subject. You also develop your writing skills, you know the content for writing the answers and so in the class. Okay. Right, in addition to that, I expect you to get some, one notebook, yes, 200 pages notebook, and some stationery which I want you to get. So stationery would mean red, green, blue, black pen, okay? Then 1 or 2 highlighters, okay? And in addition to that, a few post-its. This is not compulsory, this is not an art and craft class. Okay, so we are not here for the intention of decorating our Audit book, but yes, certainly it brings our book alive. And when you keep on doing marking, when you keep on doing coloring, then there is less of a probability that you will sleep also. Okay, so that is why, and it is very beneficial. But I have always seen, when I tell students, you should do marking, you should put post-its. When I make charts, you need to copy down those. They color it so much, they decorate it so much that I have a question. What is to be colored is to be studied, or what is not to be colored is to be studied? There is so much. So obviously you have to draw, balance between the two. You have to strike a balance between the two. Okay, I write a lot in the class when I'm teaching you. Okay, one, because it allows me to spend more time with the concept when I'm writing. Because if I just speak and go ahead, it will be faster as compared to when I write. So I do a good amount of writing in the class. It is expected that as and when I write, you can also write down. I won't be waiting much for you to finish and then you copy writing, nothing of that sort. And if you don't finish writing anything, it's okay. Well, if it's not something very important chart, okay, during the break or, at that particular point only, I'll give you the time to write. But otherwise, you are not in the class with the mission that whatever is written over here, each and every word has to be in my book. Okay, then after the few sessions, students say, okay, madam, whatever charts you're drawing over here, do you have can we get a soft copy or can we get a printout of those? To be honest, even I don't have it. Okay, I write it in every class, and then for every class, it's a new file prepared. So there is nothing called of charts or, any soft copy or hard copy of these notes. Right, yes, absolute discipline expected in the class. For me, right now, I have already told the administration also that even 10 minutes are very important for me, because for 10-15 minutes, I can cover 3-4 questions or half of a standard if the standard is small or something. So your discipline is very important for me, and no talking with the fellow person in the class at any cost for whatever I'm discussing in the class. Okay, no having a mini lecture in the class. When I tell something, you immediately remember some experience of yours, or if you think sometimes that I am wrong. So you can't tell me. Some of you may even stand up and tell me, but some of you, you can't tell me. So you keep on telling your friend, no, it's not like that, no. So that friend who is trying to pay attention, you distract him also. And you are anyways now not satisfied because nobody is agreeing to your point. Okay, so not in many words, but this is what I want to tell you, that don't interact with your friends in the class. Okay, no interaction required. You only concentrate on the subject. Yes, I don't see the notes being yet provided to you, so I think the admissions or whatever are yet to be completed. So, but still I will start with these standards right now. Probably the questions I'll start discussing from the question bank once the notes are with you. Okay, you have the latest notes with you, the second edition for the new syllabus, which includes the November 18 question paper also, the questions which are there from the old syllabus also, which are common for the new syllabus, even those are included over there. And relatively, if you see, the syllabus has not reduced to a great extent, but little bit, the size of the syllabus is less as compared to the older syllabus. Simple logic for that our old syllabus book was 650 pages, this is 600 pages. Okay. So, and see, bank audit, some part of it has been shifted to inter also. And some of you who might have studied old or anything of that, see, if you see up to peer review, we have standards, then we have ethics, CARO, company audit, liabilities of auditor, audit committee, corporate governance, audit of consolidated financial statements, non-banking financial company, public sector undertaking, audit under fiscal laws, and peer review. This is 100% same for old syllabus and new syllabus students. So in case if anybody in the class is going to write May 19, November 19 in the old syllabus, these first chapters up to peer review are absolutely same, 100% without a single point of difference between the two. And then after that, when it comes to bank, insurance company, and then, say the chapter on special audit assignments, internal control, there is a little bit of difference between the two. Like insurance company, old syllabus, there is only general insurance company. New syllabus, you have audit of insurance company, which is life insurance also and general insurance also. So likewise, there is a change, but up to peer review, 100% same, there is no change at all. Right, how many of you are writing your exams in May 19? Okay, and November 19? Those who are writing in May 19, where are your hands? You're so confident. Okay, first time you're writing in May 19, can I put it that way? Or that's the only time you're going to write? For that you have to pay attention in the class, only then that will happen. Okay, right, so May, November 19, May 20, November 20. Okay, so no problem at all. Up to next 4 attempts, if you are attending this class, see, neither the institute has the capacity to keep on changing the content. Little bit standards, there might be a new standard issued or an existing standard revised. So there are amendment lectures which are uploaded on YouTube. Okay, so and the institute RTP always comes up. So you can get the amendment. But see, standard, ethics, CARO, company audit, like 90% of it, 90 to 95% of it is going to remain the same. What I have been teaching, say now I can say 70% has been the same over a period of time. And so it's not going to change. So it's nothing like that, that you have to study just May, if my attempt is in May 20 or November 20 or May 21, can I attend the class right now? Absolutely, yes. There is no problem about it. Okay, because rather you have so many other classes. So whenever you get the time, whenever it suits you best, you should do the class at the earliest possible. Okay. Okay, you don't bring any such thoughts of empathy, sympathy, or any, okay, how can I do it? That question only should not arise. How can I do it? If I don't do it, who is going to do it? Okay, the ranks of the institute are waiting for me. Okay, that has to be the approach, okay? You don't give any thought for how can I do it, you can start, yes? And we'll start with that, we'll start with the standards. As you might be knowing, these standards are of 5 types. If you look at the name of the chapter 1, which is there in our books, it is called as the Engagement and Quality Control Standards, or which could also be called as the Quality Control and Engagement Standards. Yes, the quality control and the engagement standards. Right? Total 46 standards issued by ICAI. Okay, so now when we are starting with the batch, right now, first thing, as we've now started with standards, we will first finish the entire 46 standards in one go. So sometimes, students say, madam, morning session, we can have standards, then afternoon study, ethics or, company audit or bank insurance. So when you study on your own later on, you can follow that format, you study 4 or 5 standards and you do bank and you do ethics. But right now, for us to get a holistic view, to get a helicopter view of the entire content of these standards, it is very important, that in a link, in a series, we study the entire standards. Okay, so first now in the class, I'll be covering the quality control and engagement standards, in which you have one SQC, that is the standard on quality control, just one standard on quality control. Then after that, you have the standards on auditing. Right, so SA, that stands for the standards on auditing. So you have the 200, 300, 400, 500 series, yes? You have 570 going concern, 620 using the work of an auditor's expert, right? So all these standards on auditing. You have the 800 series also, 800, 805 and 810. Right, then you have the SRE, that is standards on review engagement. So, as a practitioner, as a CA in practice, when you're appointed to do an audit, you need to follow the standards on auditing. Then when you're appointed to do a review, you need to follow the standards on review engagement. So, if you look at the question papers before May 18, now whenever I talk about a question paper, it includes both old and new course, both together. Okay, so if you look at the question papers before May 18, the only questions from SRE, that is standards on review engagement, if you look at the question bank, the only ones are from the RTPs. That too, they had put it in the recent past. So SRE, there used to be no question asked. And now if you see May 18, there is a question on SRE. November 18, again there is a question on SRE. Yes, that is standards on review engagement. Generally, you are appointed to conduct an audit. An audit in which you express an opinion saying true and fair. And a reasonable assurance which is given by the auditor in the form of a positive assurance. But in case of a review, review is also many a times called as limited review. LR is what it is referred to as. Listed companies quarterly, they have an option, either to get an audit done or to get a review done. Okay, or to declare their results earlier. They can first get it reviewed because review takes less time. And then later on, it can be followed by an audit. Okay, so review. So in audit, we give reasonable assurance, whereas review, we give only a moderate assurance. A limited assurance is issued by the practitioner. Okay, so SRE, we have two, SRE 2400 and SRE 2410. Right, then after that we have the SAE, that is the standards on assurance engagement. So now which are these assurance? Already we've talked of audit, we've talked of review. Now we are talking about assurance other than audit and review. Like, the examination of prospective financial information, 31st March 2025, forecast, projection. So prospective financial information, then assurance reports on controls at a service organization, and you have pro forma financial information. So you have 3 standards over here, 3400, 3402 and 3420 under SAE. And now there is one more on greenhouse statement, 3420, but still now only the exposure draft has come. I'm saying, what did I tell you right now? 3400, 3402 and 3420. These are already there. But there is one for which the ICAI has issued a draft, which is on the greenhouse statement. So which is not yet applicable. But May 20, November 20 students, you keep it under an observation, whether that the exposure draft has it been finalized and whether it is now applicable for your exams. Okay, 3410, which is on the greenhouse statements. Okay, right. And the last, you have the standards on related services. So audit ho gaya, then review, then after review, you have other assurance other than audit or review, and then you have the related services. Like, CA is appointed for doing he is appointed to prepare the financial statements, which is SRS 4410, compilation engagements. And you have 4400, which is engagements to perform agreed upon procedures regarding financial information. Right, so 2 standards in the related standard series. Okay, so 1 quality control standard, SQC, yes, standard on quality control. Right, standard on quality control. Then you have the standards on auditing, that's the major chunk. Right, then after that SRE, that is standards on review engagement. SAE, that is standards on assurance engagement. It's actually other assurance, other than audit or review, when a CA is appointed. And the last one is the SRS, that is the standards on related services. So as a chartered accountant, whether you are doing an audit, or whether you are doing a review, or whether you are doing any other assurance services, or doing some related services, your entire firm always needs to follow SQC 1, Standard on Quality Control 1, Quality Control for Firms. So SQC 1 is applicable to the entire firm, whether the firm is doing audit, whether it is doing review, whether it is doing any other assurance services, or it is doing some related services. Right, so SQC 1 by ICAI itself calls it as the mother standard. You know that it is applicable to the entire firm. If you look at the title of SQC 1, okay, right now what I'm saying may sound a bit unfamiliar, but that is how it becomes familiar when you keep on listening to it over a period of time. Okay, so the title of SQC 1 is Quality Control for Firms. So the standard is applicable to the entire firm. Quality control for firms that perform audits and reviews of historical financial information and other assurance and related services engagement. Did you get the title of SQC 1? What does it say? Quality control for firms that perform audits and reviews of historical financial information and other assurance and related services engagement. So whatever be the type of engagement which you are doing, you always need to comply with the quality control standard. Who needs to comply with the quality control standard? The firm, the entire CA firm. The practicing CA, he needs to comply with that. Right, so SQC 1, I'll be covering it a bit later. Right, so SQC 1 we'll be discussing a bit later. Right now, starting with the first standard, SA 200, which is on overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. Right, so overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. Yes, overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. Yes, overall objectives of the independent auditor. Okay, what is the objective of the auditor who is conducting the audit? Right, initially, very much in the beginning, like say in 1980s, when these standards were issued by ICAI, they thought, let there be a standardization in the audit procedures being followed by the auditor. Because, each auditor, he was issuing an engagement letter as he thought should be right, say in 1970 or something. Each auditor issued an audit report as he thought would be appropriate. There was no standard format, there was no standards. So initially, ICAI came up with SAP, that is the Standards on Auditing Practices. So way back when it started, the standards, they were called as SAP, that is Standards on Auditing Practices. Then after that, they were renamed to be called as the AAS, that is the Auditing and Assurance Standards. So rather, when I had written my exams in November 2008, that time it was AAS, and they used to be serially numbered, AAS1, AAS2, AAS3, like the accounting standards. Right, and then after that, now these standards have been renamed to be called as the Engagement and Quality Control Standards. And now why? It's under the series, no? You have 200 series, 300 series. Okay, in one batch, I think in day one or day two of the class, I told them, so let's study essay 200. Overall objectives. So one student, so innocently, he asked me, Madam, 200 standards are there? Because he thought Madam is starting only directly with 200, so probably 199 are still remaining in the beginning. Okay, so I told it's nothing like that. So that way, it goes up to 4410. Okay, so it is not like that. It's just the grouping of these standards that, all audit evidence related are put in the 500 series. All using the work of others has been put in the 600 series. Reporting standards are put under the 700 series. So it is accordingly the series of these standards. And these standards are all in line with the international standards on auditing. So if there is an SA 200, there is also a corresponding ISA 200. That is International Standard on Auditing 200. And if you look at the text of the standard of ICAI, after the entire 200 gets over, they've given over there material modifications as compared to ISA 200. Okay, as in the Indian context, what they have deleted and what they have retained, what is the change as compared to the international standard? Okay, so that's the journey of these standards, starting with the SAP, Standards on Auditing Practices, then becoming the AAS, renamed to be called as the Auditing and Assurance Standards, and now they are called as the Engagement and Quality Control Standards. Okay, right, so what is the title of SA 200? Overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. Right, so we need to check what is the overall objective of the independent auditor. Yes, what is the objective? You have been appointed as an auditor by of a company. You are appointed as the auditor by the board of directors, management. What is wrong with you guys? Okay, you are appointed as an auditor by the members of the company, okay? The shareholders, they pass a resolution for the appointment of the auditors. The audit committee, board of directors, they give the recommendation regarding who can be. Now you are telling everything. Earlier when I asked, why did you say board of directors and management? You didn't have to listen to this in that case. Okay, who appoints the auditor of a company? Yes, the members, the shareholders. Okay, and this, what do you say, impulse reaction, this reflex action which is there now, has to improve further for answering MCQ questions. Why Sachin Tendulkar is known to be the best cricketer in the world is because of his reflex actions. Very impulsive. He knows that because you have to decide at that moment, the ball is coming at such a high speed and how it is to be hit. So now similarly, when the question is coming, you have to have a very good reflex action. Okay, immediately how to tackle, what should be the answer. First you're giving the wrong question and then thinking of the right one, then you will see it in the suggested. So, no, I was thinking only it should be this, but so you think now next time when it comes, I will write correct, but it never comes next time. Okay. Right, so overall objective. We need to see what is the overall objective of the independent auditor. Right, so what does the standard say? To obtain a reasonable assurance. What type of an assurance? Reasonable assurance. That the financial statements are free from material misstatements, whether due to fraud or error. To obtain reasonable assurance that financial statements are free from material misstatements, whether due to fraud or error, intentional or unintentional. It could be intentional or it could be unintentional. Free from material misstatement, whether due to fraud or error, thereby enabling the auditor. So once auditor, he gets this reasonable assurance, it enables the auditor to express an opinion, because what auditor has to do? Express an opinion as to whether or not the financial statements have been prepared by the management in accordance with an applicable financial reporting framework. Another very important term in your audit syllabus and an audit course, AFRF. What is AFRF? Applicable Financial Reporting Framework, AFRF. Yes, AFRF. So what is the objective of the essay? To obtain a reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error, thereby enabling the auditor. So once you get this reasonable assurance, then thereby enabling the auditor to express an opinion whether or not the financial statements have been prepared by the management in accordance with an applicable financial reporting framework, and then ultimately to issue a report, to report his findings. And how to report your findings? In accordance with the standards on auditing. We have the format of the audit report given in SA 700. So you have to report accordingly in the format provided by SA 700. Right? The essay says that this is the objective of the auditor, to obtain a reasonable assurance. So now going forward, I need to discuss 3 terms with you from this overall objective. Yes, everybody in the class, are you paying attention to me? Yes, reasonable assurance. Right? Then free from material misstatement. And the third term which we need to understand is the applicable financial reporting framework. Right, so first let's understand AFRF, Applicable Financial Reporting Framework. Yes, Applicable Financial Reporting Framework. Yes, today the entire day, my intention today would be to prepare the platform. So that you know some basic terms related to audit, some terminology related to the subject. Okay, like, when you watch a cricket match, you certainly know what is an over. Okay, if a 2-year child is sitting next to you and he is watching cricket for the first time in his life, and you say, over ho gaya, so then that child will think, it's over, the game is over. Okay, but, so then you have to tell, no, in cricket, over means 6 balls, which is 1 over. 1 over, it has 6 balls, okay? That is what it means in cricket. Okay, right, so 6 balls it includes in 1. So what is a hat-trick? What is a power play? What is a maiden? What is a golden duck? Okay, so you know some terminology related to cricket. That is why you enjoy the game, okay? So similarly, you should also be knowing some terminology relating to audit. Like the moment you say reasonable assurance, you say free from material misstatement, applicable financial reporting framework. We always will keep on saying sufficient appropriate audit evidence. And so this is all the terminology relating to audit which we should be very familiar, and the concept should be clear. Then only it automatically comes in our case study writing. Right, so applicable financial reporting framework. Right, what do you mean by financial reporting? FR is what? CA final group 1 accounts. Okay, right, so applicable financial reporting framework could also be called as the applicable accounting framework. Right, the applicable accounting framework. If I say the sentence in passive voice, like if I just reverse the wordings of the words, yes, it says the framework which is to be applied while doing accounting. The framework which is required to be applied, which is required to be used while doing the accounting. And who is going to do the accounting? The management. So the framework, the laws and regulations, this is the definition of AFRF given in the standard. The framework, the laws and regulations which are to be followed by the management in the preparation of financial statements is what you mean by AFRF. The framework, the laws and regulations which are to be followed by the management in the preparation of the financial statements. Example, when an Indian company, yes, example, when an Indian company has to prepare its financial statements. What framework, what laws and regulations are followed by an Indian company? Yes, Indian Accounting Standards, Ind AS and Schedule 3 to the Companies Act 2013. Right, so Ind AS and Schedule 3 is an example of an AFRF. It is an example of an AFRF. Accounting Standard Schedule 3, Ind AS Schedule 3, when a company is preparing its financial statements, say Reliance Industries Limited, it prepares its financial statements as per Indian accounting standards and a Schedule 3. Means that is the AFRF, the Applicable Financial Reporting Framework, which has been used by the management in the preparation and presentation of financial statements so that they give a true and fair view. Is this clear to everyone? Applicable Financial Reporting Framework. Okay. Say there is an Indian company. Okay, but this Indian company, say D Limited, okay, this Indian company, say D Limited, is a subsidiary of a foreign company, say, which is located in Germany. So the holding company is a German, it's based in German. Okay, say A Limited. So a holding company is where? It is in Germany. Okay, D Limited is an Indian company. So obviously this holding company A Limited will consider the financial statements of D Limited, which is an Indian company, while preparing their consolidated financial statements. And the German company. So now you know for consolidation what is required, line by line addition. So there has to be uniform accounting policies being followed across the group. So now see, though D Limited is an Indian company, it should use generally what it would have used for preparation of financial statements, Indian accounting standards and Schedule 3. But now because its holding company is in Germany and the holding company for consolidation purposes requires this Indian company financial statements, this German company will, this Indian company will now prepare its financial statements as per German GAAP. Okay, so what I want to tell you, okay, see, Indian Accounting Standard Schedule 3 is also an example of an AFRF. If an Indian company prepares financial statements as per the US GAAP, German GAAP, Hong Kong GAAP, Australian GAAP, even that's an example of an AFRF. But now further these AFRF you can understand, okay, normally every Indian company does prepare its financial statements as per Accounting Standard Schedule 3. It's obvious, it's but common. So that AFRF can be taken to be an example of a general purpose framework. Because generally every Indian company does prepare. And rather, you know, this D Limited, it will prepare two financial statements. One Accounting Standard Schedule 3 also, and one German GAAP also. Because to ROC, they can't submit German GAAP financial statements, no. Right, so general purpose framework. And when an Indian company is preparing financial statements as per the requirement of bank or as per the requirement of German GAAP or US GAAP, that's going to be an example of a special purpose framework. Right, because generally every Indian company does not prepare financial statements as per German GAAP. Do you agree? Yes, this company, because their holding is in Germany, they are preparing as per German GAAP. Okay, so I've told you, okay, one, there is an AFRF, and second, I'm telling you, okay, this AFRF, it may be a general purpose framework or it may be a special purpose framework. Later on, when I take you to the title of SA 800, later on, when I will take you to the title of SA 800, what does the title of SA 800 say? Special considerations. Just listen to me right now, as you don't have the books to see it in the books. Okay, special considerations. I'm telling you the title of SA 800. Special considerations, audits of financial statements prepared in accordance with special purpose framework. Special considerations, audits of financial statements prepared in accordance with special purpose framework. So, you know, as an auditor, when I am appointed to do the audit of financial statements prepared as per German GAAP, I am an auditor, Indian practicing CA. I am appointed by an Indian company to do the audit of those financial statements which the company has prepared as per German GAAP. I will issue the report under SA 800. Yes, I will perform the procedures as laid down in SA 800. But if the company has prepared as per Accounting Standard Schedule 3, then 200, 210, no special purpose framework, it is general purpose framework. Right, the special purpose, general purpose framework, we'll require it further also. So is AFRF clear to everyone? applicable financial reporting framework. That is the framework, the laws and regulations which are to be followed by the management in the preparation of the financial statements. Okay, right. Then what is the second term which we have over there? Free from material misstatement. So we've seen AFRF. Now let us see free from material misstatements. Right? Free from, yes, material misstatements. Okay, right. Yes, free from material misstatements. Can anybody tell me what do you mean by a misstatement? Yes, what is a misstatement? False statement, wrong statement, fraud, error. Not necessarily that it will always be a fraud, it could also be an error. Okay, so misstatement means there is something wrong in the statement. So say inventory by the management of the company has been valued at 120 crore. And the management using AS2 or FIFO method, weighted average method, they have valued inventory to be 120 crore. What is this? This is what is. We had a look at the financial statements of the company, and in the books, what did we see? That inventory is shown as 120 crore. Then as an auditor, we did the audit of this inventory. We checked the existence, rights and obligation, completeness, valuation mainly, the allocation of inventory. Right, so now when I check the valuation of inventory as an auditor, I found out, no, their inventory is only worth 100 crore. The value of their inventory is 100 crore. It is not 120 crore. And what is right now reflected in their financial statements? 120 crore. This is what is. And what should be? 100 crore. So the difference between the two, the difference between what is and what should be is a misstatement. And so what is the formula for misstatement? Difference between what is and what should be. Okay, what is related party disclosures not given? Ind AS 24, related party transactions disclosures not given. What is? What should be? Disclosure should have been given. Difference between the two? Misstatement. What is diluted EPS not disclosed? What should be? Diluted EPS should be disclosed. Difference between the two? Misstatement. What is leases disclosure not given? What should be? Lease disclosure should be given. Difference between the two? Misstatement. Anything. And you can take an example of anything. What accounting policy, accounting standard not followed. What should be? Accounting standard should be followed. Difference between two? Misstatement. What is Schedule 3 not followed? What should be? Schedule 3 disclosure should have been given as per Schedule 3. Difference between the two? Misstatement. Okay. Now, then what is material misstatement? This is misstatement. And now what is misstatement? Difference between what is and what should be. Then what is material misstatement? And materiality. Any item or information which might influence the decision making of the users of financial statements. Okay, always the entity which we are going to do the audit of is going to be Geo Limited. The name of our client throughout the class for example purpose is going to be Geo Limited, and the name of our CA firm is going to be PwC. Students ask why. It's simple and easy to write, short to write. Okay, no other reason. Okay, right. So now, when, yes, you are appointed, PwC has been appointed to do the audit of Geo Limited. Okay, and in Geo Limited, you have found out that inventory is 120 crore, whereas actually it should have been 100 crore. But the materiality which you have determined in accordance with SA 320, materiality in planning and performing an audit, materiality is 1200 crore. Materiality is how much? Any item or information above 1200 crore is going to influence the decision making of the users. And right now, what is the difference over here? 20 crore. So is this a misstatement? Yes. Is it a material misstatement? No. So material misstatement means what? Material difference between what is and what should be. Say materiality was 2 crore. Materiality is 2 crore. Then in that case, this 20 crore misstatement becomes a material misstatement. So it depends upon materiality. Yes, as an auditor, our focus is only on material frauds or errors. Yes, material frauds or errors. Okay, so free from material misstatements. When you're doing audit of Reliance last year profit was say around 40,000 crore approximately. Okay, so there even if you take 1% as materiality, and a 1% of PBT to be materiality, it comes to 400 crore. Okay, so their errors like 200, 300 crore are always ignored. Only big ones like 12,000 crore or 5,000 crore error, only those are considered to be material. Okay, right. So material difference between what is and what should be. That is material misstatement. Then what is free from material misstatement? We understood misstatement, then we understood what is material misstatement. Now what is free from material misstatement? That means there is no material difference between what is and what should be. Could we combine it on together? What does it say? There is no material difference between what is and what should be. That is free from material misstatement. Yes, so as an auditor, obviously when I have to express an opinion on the true and fair view of the financial statements, can the financial statements be considered to be giving a true and fair view if there are material frauds or errors in those financial statements? There is material fraud, 12,000 crore fraud. Can you express an opinion on those financial statements that they're saying that they are true and fair? No. So for an auditor to express an opinion, he needs to obtain a reasonable assurance that these financial statements which I am auditing, on which I am expressing an opinion, they are free from material misstatements, whether due to fraud or error. And regarding this, the auditor needs to obtain a reasonable assurance. Yes, why not absolute? Right? So now we come to the third term, reasonable assurance. Reasonable assurance, which has been defined to be a high level of assurance, but not an absolute assurance, not 100%, 99.999999% assurance, but not 100%. Say, just to be more practical, let me say 95%, 97% assurance that yes, I am telling that these financial statements are free from material misstatement. See, when I am saying reasonable assurance that financial statements are free from material misstatement, and what did I tell you? Reasonable assurance is a high level of assurance. So just as an example, I am telling you 95%. And now what is it? I am telling you that these financial statements are free from material misstatement. Why you cannot tell me 100%? Why 95? Why 97% only? Why not 100%? Due to the inherent limitations of an audit. Due to the auditor cannot give an absolute assurance, but only a reasonable assurance due to the inherent limitations of an audit. And the most important, there are many inherent limitations, nature of financial reporting, nature of audit procedures, the timeliness and availability, the cost, striking a balance between the cost benefit. Okay, so inherent limitation of the most important inherent limitation is okay, the evidence obtained by the auditor is persuasive evidence rather than conclusive evidence, right? Persuasive evidence rather than conclusive evidence. What is persuasive? Yes, convincing, most likely to be true than not. And most likely to be true than not. Persuasive. How do you define persuasive? Yes, most likely to be true than not. Most likely to be true than not. Yes, prima facie, it looks to be okay. Okay, and conclusive evidence, only that is true. Conclusive evidence, how it has been defined as? Only that is true, and any other possibility is ruled out. So obviously in an audit, nowhere are we going to get conclusive evidence. We are only going to get the reasonable evidence. Yes, as an auditor, we do not have the power, we are only going to get persuasive evidence, reasonable assurance. We do not have the power of search. We are not specialists into authentication of documents. So we are, if client provides me rent agreement, I will check whether it is signed, whether the names of the tenant, landlord have been given, the rent per month, the interest, the penalty, repairs, maintenance, who is going to take care of the period. So if I see all these 5-7 points which I have to check, I will prima facie believe that rent expenditure is appropriate. but there is always a possibility that it might be a Satyam. You understand? No, now there are many examples. Rather, Satyam is now outdated. There is Nirav Modi, Malia, so many more examples. Okay, right. So, most likely to be true than not. Persuasive evidence. And conclusive, only that is true. And any other possibility is ruled out. Once your result has come out, which says 39 out of 100. It is conclusive. And it is conclusive, not persuasive. Okay, right. Or 39 out of 100, I think, is still less of a problem. When it is 58, 58, 58, and 39, that is more bitter, you know, that is more of a problem. Okay, right. So, persuasive. So, see, the correlation is so simple. Right? The correlation is so simple. Because we get persuasive evidence, we are giving reasonable assurance. Had we got conclusive evidence, we would have given absolute assurance. Hannah, had we got conclusive, only that is true, then we would have said true and, what are you saying? True and correct. Had we got conclusive evidence, we would have given an absolute assurance, saying that it is true and correct. But that is what is not happening. Hannah, the Kingston Cotton Mills case, which says that auditor is a watchdog, but he is not a bloodhound. Yes, as an auditor, you're supposed to be cautious. You're not supposed to be suspicious. Right, auditor, the primary objective of the audit is not detection of frauds and errors. That is why, what does it say? Persuasive evidence is what we get. That is why we give a reasonable assurance. Had we got conclusive evidence, we would have given an absolute assurance. But that is not the case. Right, so now let's put it all together. Yes, the overall objective of the independent auditor is to obtain a reasonable assurance that financial statements are free from material misstatements, whether due to fraud or error, thereby enabling the auditor to express an opinion whether or not the financial statements have been prepared by the management, TCWG, those charged with governance, in accordance with an applicable financial reporting framework, and then to report the findings of the auditor. If he finds out that, depreciation essay is not followed, depreciation accounting standard is not followed, property, plant, equipment not followed, any particular Ind AS not followed, then to report the findings, or Schedule 3 disclosures not given, then to report his findings in accordance with SA 700, in accordance with the standards on auditing. Okay. Right, you are appointed as an auditor of the company under Section 139 of the Companies Act 2013. And Section 139 of the Companies Act is regarding the appointment of the auditor. Right, under Section 143 of the Companies Act 2013, 143 subsection 2 mainly, it is one of the duty of the auditor to report on the true and fair view. Yes, to report on the true and fair view of the accounts examined by him. Two parts of reporting under 143 subsection 2. Whether the financial statements give the information required by the act in the manner so required, and whether the financial statements give a true and fair view of the state of affairs, results and cash flows of the entity for the year ended on that date. And a state of affairs, balance sheet, results, profit and loss account, and cash flows, cash flow statement. Right, so what does it say? Section 139, appointment of company auditor. Once you're appointed under 139, under 143 subsection 2, your responsibility is to express an opinion on the true and fair view, whether financial statements give the information required by the act in the manner so required, and also whether it gives a true and fair view. Right, if you come to Section 129 of the Companies Act, which is regarding financial statements. 139 is what? Appointment of company auditor. 143, rights and duties of the company auditor. 129, financial statements. 128, books of account. Right, so 129, which is regarding the financial statements. It says that financial statements of a company shall be considered to be giving a true and fair view if they are in compliance with Indian accounting standards and Schedule 3. What does 129 say? When can you say that the financial statements of a company are giving a true and fair view? when they are in compliance with Indian accounting standards and Schedule 3. So now can anybody draw a direct correlation between 143.2 and section 129? If financial statements, so as an auditor, when I have to express an opinion on whether the financial statements give a true and fair view, I need to check whether the financial statements are in compliance with accounting standards and Schedule 3, because that is what section 129 say, that they will give true and fair view if they are in compliance with AS and Schedule 3. So in order to express an opinion on true and fair view, auditor, you need to check compliance with Indian accounting standards and Schedule 3. Right, so this is just a correlation of the company law over here. Okay, right. So then it might be like, okay, what is the title of the essay? Overall objectives. So now we've discussed the overall objective. The standard doesn't get over there. Right, it further talks about the ethics in order to achieve this overall objective. Right, so in order to achieve the overall objective, the standard says that auditor, you need to comply with certain other requirements of SA 200 also. Right, what are the other requirements of SA 200? One, it says auditor, you need to comply with certain ethical requirements including independence. Yes, auditor, you need to comply with certain ethical requirements including independence. Yes, ethical requirements, and in addition to this ethical requirement, auditor, you also need to comply with the requirement of independence. Right, independence, as you would have studied in Inter, it says it is a condition of mind and personal character, and it should not be confused with the superficial and visible standards of independence sometimes established by law. Right, and it says independence means that a judgment of a person is not subordinate to the wishes or directions of another person who might have engaged him or for his own self-interest. Yes, what does it say? Independence, it means that the judgment of a person is not a subordinate to the wishes or direction of another person. Right, say, let me quickly take an example of certain disqualifications which are given under the Companies Act under section, yes, under section 141, which is regarding the subsection 3, which is regarding the disqualifications of the qualifications and disqualifications of the company auditor. So, law has taken a lot of steps. Company law has put a lot of disqualifications for the company auditor in order to ensure the independence of the auditor. Like company law says that person, partner of the firm, they cannot hold a single equity share. Why? Because they think that may have an impact on the independence. That's the only reason behind it. No. Okay, indebtedness not allowed, guarantee not allowed, relative should not be a director or a key managerial personnel of the company. Right, you should not be, fraud. That is not related to independence, the one relating convicted any fraud or so. But these ones, where it is regarding any indebtedness, guarantee, officer or employee of the company, a person who is a partner or who is in the employment of an officer or employee of the company, why all these disqualifications have been put? In order to ensure the independence of the auditor. Right, so company law and a person partner, are they allowed to hold even a single equity share or any security or interest of the company which they want to audit? Rather, they can't hold of the company, the holding company, subsidiary company, associate company, and any other subsidiary of that holding company. You cannot hold even a single equity share. Relative, they can hold up to the face value of rupees 1 lakh in the company. So person, partner, relative. Person, partner, 0. They cannot hold a single equity share. Relative, say there is a limit up to which they can hold, beyond which they cannot hold. So as of, there is a limit over there. So as such, relative also cannot hold. So company law says person cannot hold, partner cannot hold, relative cannot hold. Person, partner, relative. You are the auditor of Geo Limited. Tomorrow is the board meeting of Geo Limited. The results are going to be declared by the company tomorrow. Okay, today evening you have the profit and loss account of the company in your hand. You have the draft financial statements in your hand. See, Geo Limited is a listed company. Right, you know that tomorrow the company is going to declare a profit of 1300 crore. And a profit the company is going to be declaring tomorrow when the results is going to be out, they are going to declare a profit of 1300 crore. The market expectation, there are analysts who keep on developing expectations regarding what would be the profits which would be declared by the company. So the expectations of the market, the forecast is that they should be declaring a profit of 1000 crore. And you know that tomorrow actually the profits which are going to be declared is 1300 crore. And the moment these results are going to be declared, the share price of the company is going to, it's going to increase. Okay, so now person cannot hold. I cannot hold. Partners of my firm, even they cannot hold. Even my relative cannot hold. So what to do? Call up friend, because friend is not there in the list of disqualification. And now call up friend and tell friend, purchase 10,000 shares, 50-50. Okay, price-sensitive information, insider trading. And this is an example of SEBI law where you study, where you're dealing on the basis of price-sensitive information. Okay, so in this case, to comply with the requirement of law in the context of company law, are you independent? Have you, in the context of company law, are you independent? Yes, because you are not holding, your partners are not holding, your relative is also not holding. So if you check as per company law, are you disqualified? No, you are qualified. So in this case, is there independence in appearance? Is there independence in appearance to the world legally? Does it look like that the company has complied with the requirement of law, the auditor is independent? Yes, but where is there the independence of mind? So the code of ethics stipulates that auditor, we want independence not only in appearance, but what is also expected is independence of mind. Right, so when you're calling up your friend and you're telling him to purchase these shares, then in that case, independence in appearance, yes, but independence of mind, no. Right, so you see many CAs, they set up a private company. Through that private company, they are providing services to the client. So in that case, again, there is independence in appearance, but to violate the requirement of law, but there is no independence of mind. Does everybody understand this? And this happens many a time. You will get to see a live example of this in the library. 80% of the students are studying over there only in appearance. Okay, 80% looks like, oh my God, this time. Okay, certainly they are going to clear. Okay, only 20% you see that, they are studying from their mind. Rest only, it's like a special, like those celebrities, they have an airport look. I always see, students, they have the library look. Okay, it's like some different, they are in a different world altogether when they are studying into the library. So, no, it's at home also when you're studying, say from morning 7 to, say, you got up at 5 o'clock in the morning, and now it's, say, up to 12 o'clock and you've not even got up from one place. So everybody at home thinks, oh my God. Okay, and okay, from 7 till 5 o'clock till now 12 o'clock or whatever is the time of just 2 pages of the book you've turned. Okay, right. So independence not only in appearance, but also independence of mind. That is what is required by the code of ethics.